Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, started out on a very strong note, but we did cool off from the day's high. In fact, at one point in time, we had fallen below the 25,900 mark. We clocked in the 26,000 level after quite some time, but failed to hold on to those levels, given the fact that it's also Sensex weekly expiry today. So, fair bit of volatility also kicking in. Also, the fact that we've seen a 6th straight day of gains for the market. So, some bit of consolidation taking place now. Of course, we did see the GIFT Nifty hinting at a 400-point gap up, but of course, that was not to be, given the fact that other global cues weren't looking all that upbeat. We saw a 200-point pop, but some bit of profit taking also kicked in post that. But in terms of the market action, then we are above that 25,950 mark right now, quite comfortably so. But whether so we've cooled off again. We are just about holding on to the 25,900 mark. So a fair bit of choppiness there, but nevertheless, 26,000 has been taken out. In terms of the mid cap index, that's also cooled off quite significantly from the day's high. In fact, the NSE advanced decline ratio is now also skewed in favor of the laggards. It's almost 2:3. That's the NSE advanced decline ratio. And look at the bank Nifty, that's also come off significantly from the day's high, although it did hit a fresh all-time high today. But in terms of sectoral movers, hands down is the IT pack that's leading from the front. That index is up 2.5% or so. At one point in time, it was gaining in excess of 3% as well. But lots of movers from the IT pack, the likes of Infosys. There's another trigger there. The promoters will not be participating in that 18,000 crore rupee share buyback. That of course improves the acceptance ratio for retail shareholders. I think because of that stock is up somewhere around 4%. HCL Tech up 2.5%. You have TCS up almost 2%. Wipro is up 1.5%. So all these IT names are upbeat. Of course, there's been some reprieve in terms of the H1B visas as well. So IT pack is also reacting to towards a deal, trade deal with the US as well, wherein reports suggest that the tariffs could come down to as low as 15%. So yes, a lot of news flow in terms of global cues and India US trade deal front, etc. But for now, markets are kind of taking a bit of a breather after a 6-day rally. In terms of the other movers, then as I mentioned, the Nifty Bank Index is off the day's high, but the Nifty PSU Bank Index has also managed to extend its gains. On the flip side, what's not doing well are some of these names from the what do you call it, the new age companies as well, Eternal for that matter. That's down 3%. You have Aisha Motors, that's down 2%. Interglobe Aviation, that has been an underperformer today, right from the start of the day. That stock is down 2%. Some of the private banking names like ICICI Bank have also come under pressure as we speak. Reliance Industries, that has seen a very good pop post numbers, is witnessing some bit of profit taking. That stock is down 1% or so. You have Dr. Reddy's as well, that's not doing well. But all in all, in fact, right now, as we speak, the mid-cap index has also slipped into the red. We'll talk about sectors and particular stocks as well. But let me bring on board our guest for today. Joining me is Ashish Bahety, who's a technical and derivative research analyst at ProfitMart Securities. Ashish, first of all, wishing you, your team and your family a very happy Diwali, a prosperous new year as well, and a very profitable Samvat 2082 as well. But looking at the action, 6th straight day of gains, we were looking to knock at fresh highs, all-time highs, but second half hasn't proved to be that great. We've come off quite significantly from the day's highs, almost a 150-160 point of cut from the day's high on the Nifty, and mid-cap index now in the red. Are you sensing some bit of fatigue that's kicking in, or would you say that it's just some bit of consolidation, and also the fact that it's Sensex weekly expiry that's at play?
Good afternoon, Nandita. Wish you a very happy Diwali and to all the viewers also. I don't think there's at least for fatigue in the market. Yes, we are very close to the all-time high, but we have to keep in mind that exactly last month, 22nd of September, the weekly close happened at 24,600, and from there, we've been seeing a continuously 4 week of rally, consecutive higher highs has been making, and we've seen consecutive four green candles on the weekly charts, and the market almost touched 26,000 plus marks today. So it's been a good momentum in the market, and we're seeing a sector rotation happening. The banks and auto contributed initially, and now the IT start catching up, doing the catch-up rally now. So it's a healthy sign that there's a sector rotation happening, and there's yes, 26,000 is a crucial level. There's a call writer zone where we have seen some profit taking, or some call writers are getting reactivated in that zone. But I think if we surpass 26,200 mark, we are heading for a fresh 27, fresh zone, which may lead to 27,000 plus mark on Nifty. However, we're
Hmm.
pretty bullish in Bank Nifty as a whole. Yes, ICICI Bank is showing some disappointment from last two trading sessions. In fact, it's been the third trading session technically, where we are seeing bank getting corrected. And from the recent highs of 1450, bank sharply corrected almost 70-80 points on ICICI. But other than ICICI, both Axis, Kotak, and HDFC is holding their ground very strong. And PSUs are continuing to show a good rally in the banking sector. So banks itself looks good. Yes, there's some bit of profit taking. The charts were a little stretched out, but I think this correction can be used as a re-entering opportunity.
Hmm. All right, that's the point. Spoke about PSU banks and banks at large, but since you mentioned IT starting to catch up now and sector rotation is at play, because the IT index itself has surged to a 1 month high. Ahead of earnings, we saw some traction in IT. Then again, it lost some bit of momentum, and of course, now again, it's picking up steam around a lot of news flow regarding H1B visa and other factors at play. How would you trade into this leg of the up move? Would you play it via larger names, or would you look at the ones that have already been doing well, the likes of Persistent, Coforge? What would be the play here?
So say, we believe the street overreacted to the entire AI and generative AI and all the negatives for the IT, and it corrected sharply. And in fact, the entire sector got painted with the same brush. We think the whole generative AI would be a beneficial for the mid cap and small cap ITs, and it might be a trouble zone for the large cap IT, where we've seen more of not so high end tech is coming to their offshore units. So we are remain bullish on these mid cap and small cap IT. We've seen a good rally in Birla South. The stock has moved out of F&O, and now we're seeing a good reversal pattern on the charts, and the valuation comfort is much higher in these mid-cap names. We've seen Persistent reacted very strongly after the good commentary and the numbers. Stock rallied almost 7-8% after the numbers, and it has continued to hold its 5,800 zone. So we advise that if one can go long in the mid-cap IT, preference would be Persistent LTTS and LTIM from the mid-cap IT. Avoid large cap IT as a sector right now. But yes, if somebody has to go along, then probably HCL Tech would be
Hmm.
the preferred choice.
Okay, HCL Tech would be the preferred choice, but avoid large cap names at the current juncture. Now, I want to draw your attention to another banking stock. We spoke about the likes of ICICI Bank, etc. But what about IDFC First Bank? This particular stock has hit a fresh 52-week high. Numbers also were pretty strong. The stock has gained some around 12% in the last 1 month or so. Uh, how much more of an upside can you envisage here? And is this one of the good stocks to look at within the private banking names?
See, the smaller banks is showing a better price action compared to the large names, and there we see there's more headroom to outperform the broader Bank Nifty index. So yes, stocks like Federal Bank, IDFC, and even some of the PSU names, they may continue to outperform. And we've seen IDFC was seriously in trouble. I mean, stock slipped below its weekly 200-day moving average, and there was a lot of selling pressure there. But now I think the stock is really picking up well. In this week itself, stock is up by 10%, and it's a clean, fresh breakout above its 30th June mark. So we believe the stock is heading for a new zone of 85 to 90, for which would be probably a 52-week high area for the stock.
Okay, that's about it about IDFC first, but let's talk about HUL as well. The numbers came out. They were a beat on the back of a one-off, and the stock did react when the numbers came out. It was up 3% at one point in time. The stock has, of course, given up some of its gains, and although it's trading in the green, it's just about 0.3% kind of. It has clocked in gains of just about 0.3% right now. But if you look at the moves of some of these FMCG names, even after the GST announcement, the proposal or the announcement that PM Modi made back in August, even then we did see an initial pop, but it didn't really sustain. So for the likes of HUL, Marico, Dabur, would you expect any kind of a pop, or would they remain in that sideways kind of zone going forward? What are the charts telling you? Because any kind of up move hasn't really sustained so far.
Yeah, see, so we believe that for another 1 month or so, the stock will remain in a sideways. But overall, it's a good time to accumulate these stocks, stocks like HUL, Nestle, and Marico from the FMCG. Probably next quarter onwards, we can see the GST impact on their quarter numbers, and that's where the street would catch up on the price action will catch up to the quarter numbers. So it's a good time to accumulate. Stock are like most of these stocks are trading near their 20-day MA or near their 200-day moving averages. So the valuation wise or the risk reward is very favorable in these stocks. For the specifically stock like HUL, I think the good zone would be 2600 to 2550 zone would be good zone to accumulate, but one should keep a stop loss of 2500 for sure.
Okay, your stop loss of 2500 for sure on the likes of an HUL. But let's talk about some of these gold loan companies as well. The likes of Muthoot, Manappuram, they've come off quite a bit given the fact that we've seen gold prices also cooling off. It's off somewhere around 6-7% from its all-time highs. Do you see a reversal now? Because I think in the last 5 days, some of these names have lost somewhere around 5% or so. But they've, of course, had a very, very good run over the last 6 months. And, these are, of course, plays on the rally that we have seen, or the supernormal returns that we have seen from the precious metal lot. But here on, do you see, some bit of volatility kicking in, and perhaps would you advise booking profits in some of these names?
Certainly. See, the gold and silver rally is not over yet. There's a mild correction to the market, but we think the rally would continue. The charts were too stretched out for both gold and silver, along with there was a FOMO trade was happening there on the precious metal side, and the same is getting reflected in Muthoot and other NBFCs which are into gold financing business. Last almost from the lows of 52-week lows, the stock has rallied almost, Muthoot Finance has rallied almost by 90% plus zone. So yes, I think it's a good time to book the profits and take some profit home.
Good time to book some profits in the likes of Manappuram, Muthoot, but the rally in gold and silver is far from over. But let's talk about some of these smaller names that are reacting to their numbers. The likes of Jain Resources. This stock hit record highs on the back of a strong show in the second quarter. Even EPAC Prefab, that stock hit a fresh 52-week high after a 2x jump in its second quarter profit. What do you do with these two names? Because they are up, I think, somewhere around in double digits or so. Last time I checked that the second stock that I spoke about, EPAC Prefab, that was up somewhere around 15-16%. Are these just one-time wonders, or or is there an opportunity here?
See, these are high beta stocks, and when the trader should remain cautious here. But those who are invested, they should enjoy the significant rally which is happening in these stocks. Just trail the SL for both these stocks. For Gen resources, one should keep a stop loss of 350 and continue to ride the rally. Stock is trading its all-time high zone. Similarly, for EPAC, the same story continues. There's a good significant jump, I think 13-14% in today's trading session with a decent volume breakout here also. So one should keep a stop loss of today's day low, that is like around 215 zone, and continue or ride the rally.
All right, continue to ride the rally. That's the view on some of these smaller names, high beta names at that. But let's talk about Bharat Forge. This stock is also up somewhere around 4 to 5% or so. Has been in a steady uptrend as well. If you see the different periods of the charts pertaining to different periods. Of course, this time the trigger is that it has won an Indian Army carbine order, according to reports. The stock is at 1300. It still has a significant ground to cover for it to move towards its 52-week highs. Would you expect this run towards that zone to extend, or would you expect some bit of consolidation to kick in after that steady up move that the stock has seen?
Yes, its stock is nicely consolidated. It's near its 200 EMA, and from there it has taken a good support and moved and surpassed all its resistance zone, near-term resistance zones of 1270 and 1280 zone. Stock is now heading for the almost 52-week high area, which is like I think in July this year itself, stock moved to made a high of 1300 to 1330 zone. The stock is approaching that zone. Overall, by the way of open interest and the price volume looks steady. Looks like there will be a steady rise in the stock. We think we might see a 1360 to 1380 zone soon on the charts.
Okay, 1360 kind of levels can't be ruled out on the charts of a Bharat Forge. But now, what about some of these textiles and export related stocks which have seen quite a bit of traction today? Of course, that's on the back of some bit of optimism with respect to India-US trade deal. Reports are suggesting that the tariffs could come down to as low as 15%. And of course, there's been a fair bit of dialogue between US President Trump and Prime Minister Modi as well, because of which we saw some bit of excitement in the likes of Vaibhav Global, Bardhaman Textile, even Avanti Feeds for that matter, Wellspun Living. All these stocks are upbeat. They have seen a significant correction as well after that increase in tariff, additional 25% tariff, etc. But would these feature in your list either on the buy side or the short side?
So I think from these textile companies, I think KPI Mills would be our preferred pick. It's I'll say a mid cap size company with close to 30,000 plus kind of market cap. So well diversified businesses, and the US contributes significantly to their business lineup. And the way stock is moving has moved above its 20-day exponential moving average. And given a clean breakout today, the share volume was almost close to 1 million plus shares clocked in with a 5% kind of a gain. So any dip can be bought here. Stock was consolidated near its 200-day exponential moving average. The stock is moving out of a base. So one can any dip can be bought here, but one should keep a stop loss of 1050.
Okay, dips can be bought, but keep a stop loss of 1050. Godfrey Phillips, that stock is down 7%, top loser on the Nifty 500 index today. Has there been any levels that have been violated on the downside? Any crucial levels that have been violated?
I think its stock has been was consolidating in the upper zone of after the split, after the bonus, I'll say. The stock was had a little bit of selling pressure we have seen, and it's been consolidating in a tight zone. But today, I think it's a good time to book the profit in this zone, because if it slides below 3,100, we might see even stock touching 3,000 or even slipping below those levels. So those investors who are holding long can book profit here.
Okay, that's the view on Godfrey. Booking profits is suggested here. But what about Eternal? Some bit of profit taking here as well after it hit record levels of 368. Is it a good time to buy, accumulate this stock on dips?
I see stock has seen a massive rally, not just Eternal. The entire New Age pack has moved significantly, as was showing massive strength on the charts. We don't prefer to buy singularly on one stock as a from this space. So our approach would be to make a basket of these New Age stocks like Zomato, Swiggy, Nykaa, and Delivery, and make a basket approach on these stocks, and one can accumulate for a little longer term horizon rather than a just swing trading perspective.
So, what do you do with two-wheeler stocks as well now? Because some of these names have seen selling pressure in recent times. Bajaj Auto, Hero, Eicher, all of these stocks. Any thoughts?
So the entire pack has, as I said in the start, the two-wheeler and in fact the autos, which was the first one to show the first sign of reversal and moved, really helped the Nifty to move, and they are the biggest beneficiary of the GST cut. So yes, there's some bit of profit taking, but this is also giving I'll say an opportunity to re-enter these stocks. So our preferred pick would be TVS Motor from the entire pack. So we are just waiting to stock to slide further till the zone of 35.50, which would be a good zone to re-enter the stock.
Okay, 35.50, a good zone to re-enter the stock of TVS Motor, and that's of course the preferred pick among the two-wheeler pack. But as we speak, Ashish, I think we've given up all of the gains. In fact, the mid-cap index is poised to end the day in the red. The Nifty just about clutching on to the green territory, only 5 points up as we speak. Quite disappointing, right? After such a strong start. I think 26,000, I think 77 or something. That was the swing high for the Nifty today. Just checking that level, it was 26,104. That was the high for the day, the swing high. We've completely cooled off, I think, over 200 points now. That's clearly very disappointing, but some bit of consolidation, of course, after 6 straight day of gains. Any, just about 4 minutes to go for the markets to shut. Any BTST strategies from your end?
So one can go long in Coforge. Those numbers, I think, is expected tomorrow. So the stock is looking good in these levels. One can go long by way of option. So 1760 call can be bought at 43 level by keeping a stop loss of 35.
Okay, Coforge, of course, you can go long on this stock. That's the BTST strategy coming in from Ashish. Ashish, any thoughts on OMCs? There's of course been a lot of news flow around crude and US sanctioning two Russian firms. A lot of talk of how India would curtail its oil purchases from Russia. Of course, all of these are report based. No confirmation from the Indian side as such. But that has of course been weighing on oil prices as well. Today, of course, on the news of the Russian sanction, crude prices were elevated. They were up 3% or so, and we saw a reaction coming into shares of OMCs as well. HP, BP, IOC. Any preferred pick here?
So I would say that IOC is looking good on on the charts as a shorting opportunity. Stock has given up all its gain and of last 8 to 10 trading sessions, slide below its 20-day exponential moving average, and have more, I think, more exposure towards the Russian oil and some tie-up with the Russian state entities as well in terms of some partnership tie-ups. So we might see some more of a selling pressure in IOC compared to BPCL. HPCL is certainly a high beta stock, so we might see some volatility there. But one can short IOC with by keeping a stop loss of 152. We expect the stocks to slide to 146 level.
Okay, that's about the OMC pack. IOC, of course, on the short side, looking good on the charts. But with that, Ashish, would like to thank you for taking our time and joining in. As usual, lovely chatting with you. Wish you a very, very happy, Summer 2082. Hope you have a profitable one. And of course, we'll keep touching base and chatting about the markets and your stock recommendations as well. But, thank you for taking our time this afternoon and joining in on Moneycontrol. All right, then just about a minute to go for the markets to shut shop, and we've kind of completely cooled off. In fact, the Nifty just about wrestling. Bulls and bears rather are wrestling to end the day either in the green or red territory. Let's see which way it is, but nevertheless, disappointing, so to say, after such a strong start. We are just towing the flat line, and perhaps even will end the day with a shade of red on the screen. 25,868, that's where we are at. We've given up that 25,900 level. The Nifty, of course, had clocked in an intraday swing high of 26,104. I beg your pardon. So that would be the next level to once again watch out for on the higher side. But right now, look at the screens completely flattened out. 25,870. That's where we had. That's where we are at. We couldn't even defend that 25,900 level. But of course, it was the weekly expiry for Sensex contracts. So a fair bit of volatility kicked in the second half of the session. We were cruising along above that 26,000 level for the better part of the day. But second half is when we cooled off quite significantly from the day's high, almost or over 200 points shaved off here. But the Nifty Bank Index hit a fresh record high today. I think it was 58,477. That was the fresh high or all-time high on the Nifty Bank Index. Yes, 58,577, cooled off significantly from the day's high to end even below that 58,000 level. But on the other hand, you had IT that was lending support. That index hit a fresh 1 month high. It it was leading from the front, gained somewhere around 3% or thereabouts. Look at the likes of Infosys gaining somewhere around 3 to 4%. All the other IT names also had a positive rub-off impact. But in terms of some of the other sectors, barring the bank and IT packs, let's see what the other sectors were looking like. Most of the sectors, in fact, were in the green for a better part of the day. But towards the second half, we saw autos completely flattened out. We saw metals ending the day in the red. Pharma names, the likes of Cipla, Dr. Reddy's were under pressure today, so that index is also in the red. The Nifty Energy Pack is also in the red because of 3% surge on crude prices. We saw some of these OMC stocks ending the day with cuts of 2 to 3% a piece. Of course, on the gaining front, you had the likes of Infosys and HCL Tech, TCS. These are the top 3 gainers. Shriram Finance doing well. Axis Bank, ONGC, Kotak Mahindra Bank, these are some of the other gainers. On the flip side, stocks that didn't do all that well, Eternal was the top laggard, down 3%. Interglobe Aviation, some of the two-wheeler makers like Eicher, Bajaj, all of them ended the day in the red, and so did Reliance Industries after a very, very good run post its numbers. But on that note, let me bring on board our next guest for today. Joining me is Radha, Raman, Agarwal, MD and CEO, Swyom Advisors. Mr. Agarwal, lovely chatting with you. We've had a very good run. It was a flat year, yes, but the last 2 weeks, 3 weeks, we saw the bulls gaining traction. I think they picked up steam at the right time to enjoy all the festivities, and we did clock that 26,000 mark as well today. Didn't really manage to close above that level, but still it has been a good up move in the last 2 to 3 weeks. Do you see or do you expect this leg of the up move to extend and a retest of fresh highs, and what is the kind of upside do you see during for the next 1 year going forward?
So first of all, thank you for having me here. Wish happy Diwali to everyone and a new year. I think this new year has brought in a lot of hope and numbers. If you look at last 2 to 3 weeks, we have been doing very well. We reached about 26,000 Nifty, and we expect the Nifty to move ahead and in fact create fresh highs. So the whole idea is that given the interest rate cut, given the whole GST cut and the income tax benefits, I think broadly these three areas will cover. And with this US deal happening, broadly, I think coupled with this particular three areas, and for example, if you see the whole the shopping thing for Diwali has been quite good. So in fact, the associations have reported a huge number, and most of the companies have been very positive. So we see the momentum moving ahead on the consumer side. I think that's going to be very good, and Nifty will move ahead and actually create fresh highs for us.
Okay, when you say fresh highs, would you be looking at 30,000 over the next 1 year? Is it possible on the Nifty? What is your sense?
Very much possible. Maybe anything between 29 to 30,000 one should look at.
All right, expect the index to hit that 30,000 mark in the next 1 year. But of course, the Nifty Bank Index, that has managed to clock record levels. We've seen private banks playing catch up with PSU banks. PSU banks already had a great run. Numbers have been fairly good, barring perhaps ICICI Bank, which saw some bit of slowdown in loan growth. But what is your preference? A, would you prefer the larger private names, or would you look at the PSU banking names which have seen a good run? Do you see more upside in PSU banks or private banks going forward?
So I think one should look at a good mix between private and PSU banks. I think private banks have given good numbers. Even ICICI Bank were slightly lower, but otherwise it was very good. So by and large, I think one should look at HDFC and Kotak to that extent, more in terms of private banks. But I think PSU banks are offering a lot of value on the large side. I think they'll be led by primarily Bank of India, SBI. I think these are two packs, and followed by Indian Bank. If you look at three stocks in that space, so PSU banks, in fact, well poised for growth. And given the opportunities, given the way they are reflecting the numbers, it'll be quite good to look at. And if you look at slightly smaller banks, I think there are a lot of deals happening. Recently, there was an RBL bank deal. I think we are getting a foreign player into that. So I think those also will be driven, and the sector is getting quite hot. So one should also look at the right set of smaller banks as well. But primarily led by private banks, followed by PSU banks.
Okay, private banks followed by the PSU banks. But what about the larger financial space? As consumption picks up, so does consumer credit. So would you look at some of these larger NBFCs like Bajaj Finance, Shriram Finance that have already seen a good run up?
Absolutely. So if you look at from an NBFC perspective, I think both the larger ones and the mid-size and smaller ones also will play an important role. I think consumer finance is going to pick up with this GST cut happening, with the whole automobile piece. Even the personal loan, gold loans should also pick up. So if you look at primarily the key picks will be Bajaj Finance on the larger side. And we prefer a stock which is Capri Global on the NBFC side, given in terms of the way they have performed. And in fact, they had a fundraise some time back. And given the capability in terms of raising capital, I think that stock is also looking quite good. So overall, the space will be quite active given the consumer spending. And I think people will be borrowing a lot of money in terms of spends. And this will be fueled by the whole GST and income tax cut.
All right. Any thoughts on SBI card as a pure play credit card player?
See, SBI card looks good, but overall, if I look at, I would prefer NBFCs over the card business. So I think the preference should be given to more consumer finance, because that sector is going to benefit the most in terms of the current piece. So again, they'll be good, but maybe NBFCs will have an edge over them.
All right, NBFCs will have an edge over pure play credit card players. But talk about the defense pack as well. The Nifty Defense Index, so to say, is still 8% off its all-time highs. A lot of these names like BEL, HAL, they've been bagging big orders. Valuations wise, where are you? When you look at defense names, do you think they are they are now attractively valued, or would you wait for some more correction for valuations to come at par?
Maybe I think the sector is well poised. Overall, if you look at the push which government is also giving in terms of orders, as well as in terms of what they're also looking at exports for this sector, the sector looks good. If you look at from a valuation, maybe some bit of correction is possible. But I think one should enter into tranches. And one of the picks, if you look at, we are looking at Astra Micro. I think that's a stock, if you look at from a defense pack, they have done extremely well. And we look forward the particular stock going forward as well. So one of the areas, I think in defense, we look at Astra Micro as a pick for us.
All right, look at Astra Micro. But, before I let you go, 3 top themes in terms of alpha generation, what would they be?
Say one of the areas I think one should look at hospitals. I think healthcare will be one important theme in terms of one should look at. Other themes should be on the consumer and consumer durable side. So I think if you look at from a stock perspective, with the GST cuts happening, we are quite bullish in terms of the whole piece in terms of be it IFB industry, Stovecraft. I think that's a piece what we should be looking at in terms of consumer durable. And the third theme can also be affordable housing. I think that's a piece also which can pick up. And if you look at from a stock perspective, we can look at a home shelter, the whole India first kind of a stock. So that's something which you can look at. So these are 3 big themes primarily in terms of
those
we're looking at.
Go ahead, Nandita. Got your point. With that, Raman, thank you for taking out time and joining in. Lovely chatting with you, and I of course wish you a very happy Diwali and a prosperous new year ahead, and look forward to more interactions in future as well.
Yeah. Thank you, Nandita. Thank you so much.
Thanks a lot. Well, then we've just about managed to close in the positive territory for today, and of course to talk about the markets and with his stock picks, or the stocks that are on his radar, not his picks, but the stocks that are on his radar. Joining me is my colleague Yatin Mota. Yatin, first of all, very happy Diwali.
Happy Diwali.
And let's hope that we hit that 30,000 mark on the Nifty.
Yes, absolutely.
Over the next 1 year, as many experts have already charted out their target prices for Nifty going forward. But the big disappointment today is that after clocking in an intraday swing high of 26,104, we've come off significantly from the day's high, and just about managed to end the day in the positive territory. In fact, the Nifty Mid Cap Index ended the day in the red. Looks like some bit of volatility kicked in because it was Sensex expiry and 6 days of gains. Right?
Yes, 6 days of gain. And Nandita, the SGX Nifty, or the GIFT Nifty rather, was showing a 400 point gain. We opened only 200 points higher. There was some initial, volatility. Then gradually in the last 1 hour of trade, as you mentioned, maybe because of the Sensex expiry, we saw a sharp fall in the markets. But if you look at the overall picture, frontline stocks have been doing well. Earnings have been good. In fact, HUL spoke about how pickup will most likely happen post-November. They have maintained their margin guidance. In fact, they are expecting slightly better margins from here on. So, and Tata Motors came out with their, update of Diwali and the Dashera period. 33% growth in the festive period. So, data points and overall demand sentiment is strong. Overall, the earnings probably are expected to catch up. Mid caps are lagging. That is the reason why the advance decline ratio deteriorated almost 1:2 by the end of the trading session. But yes, quite a volatile trading session. But yes, 26,000 sustainably, if we try to climb up, probably there is more bout of short covering which can happen from the FII desks.
That's true, and good part is that FII sell-off seems to have abated. We saw consecutive sessions of buying emerging from the FI community, and as you mentioned, not just buying in the cash segment, there's a lot of short covering also happening in the futures segment as well. So yes, that's one good news. Let's see, with good numbers and good management commentary, if we can expect FIs to come back in a meaningful way and pumping in more money, in contrast with the kind of money they've pulled out from the Indian market this year itself. But of course, Yatin, what were the mid-cap movers? Because we haven't really touched upon that in greater details. From the large-cap universe, of course, it was the IT names that dominated the gainers list. On the flip side, you had the likes of Zomato and some two-wheeler names that were out of favor. But from the mid-cap universe, which were the ones that caught your attention?
Yeah, so let me read out the list. Clearly today we have Shipping Corporation of India, that stock moved 8% to hit a fresh 52-week high. Most importantly, we have the Government of India, which has been talking about how they want to incentivize the entire shipping sector, including shipbuilding in particular. IT stocks were doing well, so we had the likes of Birlasoft doing well, Naukri was up 5%, Birlasoft 8% higher, and also the trade deal related stocks, especially Vardhaman Textiles, KPR Mills, Welspun Living, all of these stocks up 4 to 5%. What was not doing well is Force Motors, Poonawalla Finance, all of these stocks down 4-5%. Clearly, if you look at the mid-cap banking space, that was doing fireworks. Bank of India up 4%, new 52-week high. IDFC First, Shriram Finance, City Union Bank, all of these stocks are hitting fresh 52-week highs. So financials really are the core where the markets are focusing on. And apart from financials, we also have the IT stocks which made a comeback today.
That's true. And tomorrow, Coforge is one stock that is being focused. It reports numbers. And the expectations from mid-cap IT were higher than those of large-cap IT, but let's see how things really pan out for Coforge. But let's talk about some of the earnings big earnings that came out today, starting with HUL. In fact, that's the only Nifty company that really came out with numbers today. Numbers were far better than expected in terms of profitability. That was up somewhere around 3% on a year-on-year basis. That was because of a one-time gain of 184 crore rupees. Revenue growth was modest at best. Margins were slightly better than what the poll was throwing up at 22.9%. Expectation was 22.5%. There were going to be some GST related disruptions any which ways because of that, and that's why Q2 was anyway supposed to be a muted quarter for the company. In terms of volume growth as well, there was, I think, an expectation of 0 to 1%. It has been extremely flat. But as you said, the management itself has said that things will pick up from November onwards. October again, we'll see some disruptions due to the GST changes. But in terms of the margin guidance as well, they have maintained it. They've said that they will fare better. And it's the volume-led growth that the management will be aggressively focusing on. In terms of their different segments, home care, here there was a sustained competitive volume-led performance on a strong basis, in fact on a strong base. It delivered mid-single-digit underlying value growth offset by price reductions in the previous quarter, which was of course GST related. In terms of beauty and well-being, it delivered a 5% underlying sales growth driven by skincare, health and well-being. And in terms of personal care as well, the turnover growth was flat, impacted by the changes in GST rates. Food business saw 3% underlying sales growth with low single-digit value growth. But coffee is one segment that sustained its double-digit growth momentum, and the company also said that early green shoots were observed through sustained, underlying value growth in lifestyle nutrition. In terms of their portfolio transition, they've said 40% of the portfolio has transitioned to the 5% GST slab. And they have implemented grammage and pricing changes to 1,200 of their SKUs. EBITDA, of course, was in line with their guidance. They are expecting second half to be much better than the first half, and they are expecting a low single-digit price growth going forward. They said they will be obsessed with volume-led growth as their long-term strategy as well, and they will radically transform their core brands going forward. The stock did end in the green, but right after the results, it saw a very smart pop of 3% or so. But the street, of course, digesting these comments. But November onwards, things will be much better, and second half will be much better when compared to the first half, even in terms of volume growth.
Absolutely. And if you look at HUL, I think the new management has taken reins, and this was the first quarter in which there was a full-fledged outlook post the GST. I think 40% of their portfolio already is in the 5% slab, and the kind of SKU changes, which is the special business units in which they are trying to change their grammage, trying to change their MRP. All of those transitionaries are happening right now. Hopefully, this transition will be behind us, and November onwards, the management is indicating that the volume growth is expected to pick up.
That's true. Well, that was about HUL numbers, but the defense pack was also
Yes,
upbeat today,
yes.
Yatin, and a couple of more big order wins. Take us to them.
So, on Diwali Day, the PM was on INS Vikrant off the Goa coast, and he was speaking to Navy personnel. He, spoke about the robustness of Indian defense systems, in which he said that in the last 10 years, the defense exports have risen 30%, and probably from here on, they want India to be one of the top, export hubs for defense production. Not only that, he also stressed upon how he is looking to indigenize content and, build the Indian Navy, specifically to submarines and warships. Talking about particularly stocks which were in focus today in the defense pack, Bharat Forge, that stock ran up 4% in trade today after getting almost 1600 crore order from the Indian Army for rifles. And these are the new rifles which will be inducted in the Indian Army. Along with Bharat Forge, the small order also came to Adani Enterprises, the defense arm, in a joint venture, obviously. When it comes to Bharat Electronics, they won a 600 crore plus order from, the Kochi shipyard. They are, looking to have a indigenous system when it comes to the Navy defense segment also. So that order kept Bharat Electronics active in the first half of trade. And we also have the shipbuilders or the shipyard companies, which is Mazgaon Dock as well as the Kochi shipyard, which were in focus after a lot of these South Korean companies are looking to bolster their investments in the Indian shipbuilding industry via joint ventures with PSUs and private sector. The entire shipbuilding pack was also quite active in trade. So across the board, defense again is trying to make a comeback. And remember, the Nifty defense is still 8% off the recent highs that it made. Hopefully, with new orders coming in, government focus again getting renewed, chances are that they might again test all-time highs on the Nifty defense.
That's true. Some ground to cover, 8% off, but so many order wins and the government's push towards self-reliance in defense, that bodes well. Also post-Russia-Ukraine war, even European companies are upping their defense spending, and of which Indian companies will also be beneficiaries as they win more and more orders.
Correct.
So yes, lots to watch out for when it comes to the defense pack. But let's talk about some consumer tech names. The recently listed ones, the likes of Urban Company, which saw a very, very solid and celebrated listing, but it has kind of come off and fallen below its listing price as well. But there are two initiations from brokerages, global brokerages on this particular stock, Morgan Stanley and Goldman Sachs. Now, Morgan Stanley has initiated coverage with an underweight rating, and they do see some bit of downside from here for the stock because they believe that all the growth is already in the price after the solid listing that the company had. They have, of course, initiated with underweight rating, and the target price stands at 117 rupees a share, which is a 26% downside from the last traded price, the previous day's price. In fact, they've said they've listed out some positives as well, that the company has a large addressable market in online home services. It is supported by competitive moats. The experienced founding team also brings a lot to the table, so that's also a positive. But most of this is already in the price, given the fact that the company or the stock has already seen quite a fair bit of an up move. They are expecting the core India consumer services net transaction value to grow at a compounded annual growth rate of anywhere between 18 to 20% over FY25 to FY28. But they said that the higher churn and supply constraints could drive growth, but at a calibrated pace going forward. It is expecting its consumer services business, excluding the new InstaMaid service that they have started, to reach adjusted EBITDA margin of 30% in the medium term. However, they have to make continued investments, in this InstaMaid facility, which of course will prove to be a drag on profitability, according to Morgan Stanley. Even Goldman Sachs has initiated a call, with a neutral rating on the stock. Here the target price is 140 rupees, and of course they are expecting 24% revenue compounded annual growth rate over FY25 to FY30, and 35% ex Insta Help. The stock of course made a post-listing high of 201 rupees per share. It's down over 25% from those levels, and of course it's even trading below its listing price of 162.5. But now these brokerages have come out and said that it could go even lower because all of that is already in the price. So let's see how things really go, because they have launched this InstaMade service that would also require a fair bit of investments, and that could perhaps weigh in on near-term profitability. But let's see how things really pan out, because I think it's the only organized player, so to say, in this home services segment, and the management sounded pretty upbeat. They said they'll be transparent about their investments and earnings and everything from the very first conference call itself. So they do hold promise, but a lot of it is already in the price, given the kind of euphoria it saw during its listing.
Absolutely, and the stock, both for LG Electronics and Urban Company, blockbuster listings. But post the listing, we have seen the highs not getting crossed. Probably, they're consolidating, people trying to understand quarterly numbers, valuations, and probably, something like a Zomato. All these companies are, futuristic companies with strong growth prospects. But yes, as you were mentioning, valuation is something which is still concerning to a lot of brokerages. That's
true, Yatin. So overall, it was turning out to be a good day, but, whatever said and done, one would be disappointed. I would just like to equate it to what's really happening in Adelaide today. A lot of expectations were riding. Rohit Sharma did, make a half a century, but, of course, Virat Kohli failed to do so. But, there's always next time, and the next one at Sydney to watch out for. But nevertheless, I hope we end up winning this one and leveling to 1:1 before we head towards the third one. But let's see how the boys really perform. Right now, it's looking pretty okay. Australia has lost 4 wickets, so let's see. Hopefully, we'll win this one. But let's see. Tomorrow is another day. We will stage a comeback on the Nifty as well. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Have a great evening and come back and join in tomorrow, Friday, at 9 a.m. on Opening Bell. Thank you.